The Australian property market has recorded its largest decline on record. According to CoreLogic data, national home values have slumped 8.4% since their peak. The previous record downturn was an 8.38% drop between October 2017 and June 2019. Joining me now live is CoreLogic Head of Research, Eliza Owen. Eliza, thank you so much for joining us. What factors are contributing to this slump?
Yeah, good morning, Danica. Thank you for having me. This record decline is really off the back of a strong surge in the cash rate and interest rates. I think it is pausing and worth acknowledging just how extreme this 300 basis point increase in the cash rate has been. The last time the cash rate increased that much, it took about 6 years, not 8 months. So that's limiting borrowing capacity, and it's creating a high cost of debt, which is putting off a lot of buyers. Sentiment is also low, and that's taking people out of the market as well.
It's quite a significant decline, as you said. How did the cities fare across the board? Which city has recorded, in particular, the biggest downturn?
Yeah, this is a really good point to highlight because underneath that headline national figure, there's a lot of variation. We're finding this peak-to-trough decline has been led by Sydney, which is down 13% from a peak in January last year. Following that, the biggest decline is actually in Brisbane, down 10%. And across Melbourne, we've seen a decline of just over 8% peak to trough. But then there are some resilient markets, for example, Perth, where values have fallen less than 1% from recent highs.
Is it a catch-22? I mean, what does this mean not only for buyers, but people also looking to sell?
For buyers, it means that, yes, you can get a property at a cheaper price, especially in some of those aforementioned cities with large price falls. They have a lot more negotiation power at the moment, and properties are taking longer to sell, so they have more time to make their decisions. The only drawback is that interest costs are higher and price falls haven't been enough to offset that. So it's not an ideal position for everyone to be buying. For sellers, depending on which market you're in, again, you probably need to be more patient and willing to offer a discount on your property in order to get a sale done.
Yeah, that's some good advice. Very different perspectives there for buyers and sellers. If you're, I guess, now a borrower on a fixed rate, your mortgage repayments are going to increase. I mean, how difficult will it be to decide how much you can afford now, given this downturn?
Yeah, this is going to be one of the key risks for 2023. I don't think we've ever seen such a high volume of lending on fixed rates, and most of that borrowing is due to expire over the course of this year. So you're talking about people who could be going from interest rates on their mortgage below 2% into an environment where interest rates are 5 to 6%. I think the best way to get ahead of that is just to talk to your bank if you're unsure about how your repayments might change this year, and then look into what your options are. Has your income gone up enough that you can service this increase comfortably, or is it time to rent out a room, rent out the property? And if worse came to worse and people did have to sell, we're still finding that even though there's been a sharp decline over the past few months, most areas are still seeing values higher than what they were a year ago, 2 years ago, at the onset of the pandemic. So we think broadly Australians are going to be okay through this period, but 2023 is going to be a very interesting test of the market.
So just on that, what's the outlook? Can we expect this trend to continue?
I think as long as the cash rate keeps going up, we can expect further downward pressure on property prices. Once we get a pause in the rate hiking cycle, that's probably when we'll see values start to bottom out. There are some things that could put a bit of a floor under price falls, like a strong rental market, which has been much more driven by population trends than interest rates, and as well as the fact that we're still seeing that growth sitting much higher than at the onset of the pandemic, and potentially investor interest returning towards the end of the year as well.
Eliza Owen, thank you so much for joining us this morning.
Thank you. Take care.